In 2017, we had a new president of the United States that shocked everybody getting voted in called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump who is coming in a few days' time on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now? And oh my God, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me. What does it mean for my shit coins? Okay. It all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern.
History is repeating itself. Just like in 2017, Trump's return as president indicates massive Bitcoin gains ahead. That's the latest word from Raoul Pal, veteran macro analyst and the CEO of Real Vision. Donald Trump is back as president, pushing policies like tariffs, trade wars, tax cuts, and deregulation, just like in 2017. Back then, we saw markets panic as M2 collapsed, but it didn't stop Bitcoin from proving its potential. Fast forward to now, and things are different. With more institutional support and easier access through ETFs, Bitcoin is looking stronger than ever. So, while the patterns may feel familiar, the opportunities this time around could be even bigger. Make sure to stick around until the end of the video as Raoul Pal reveals valuable Bitcoin outlooks. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Now, here's Raoul Pal on why Bitcoin is set to surge.
Let's start with the elephant in the room, because you guys are nervous fucking Nellies. Oh my God, everything is so scary. The crypto went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean that Bitcoin's going to 70,000? Calm the fuck down. You all need to grow some cojones, and you need to learn stoicism, inner peace, meditate, do anything but stop bleating on Twitter about your fears all day. If we did that anywhere else, people would get really bored of us. I get really bored of it. So let me talk you through why you should stop your bleating. Firstly, in 2017, we had a new president of the United States that shocked everybody getting voted in called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump who is coming in a few days' time on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now? And oh my God, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me. What does it mean for my shit coins? Okay. It all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern, which kind of says that global M2 should probably base around here. Again, don't expect perfection, but expect some repeat. Oh, the NASDAQ did something similar too. It would suggest the NASDAQ should be going up pretty sharply now. And lo and behold, today, the NASDAQ has a really strong day. Feels about right. Old Trumpy boy's about to come in. But it's about the dollar. The dollar's been strong. That's what's been driving global M2. And guess what? It was identical back then too. Now, this chart's been copied by every fucker on X because they're too lazy to do their own research. Started with us, as all these charts did. The M2 charts, all of them, was myself and Julian Battelle, a global macro investor, and then Real Vision Pro Macro, and then we spread it further with the world, and they all get copied. But I guess it's flattering. What it's suggesting is Scott Bessent speaks, I think, tomorrow. He should start signaling, along with Steve Mirren, that the dollar is too strong and it needs to weaken. The dollar is being used as a weapon against China, Europe, Canada, and anybody else who has trade deals to do. They've all got weak currencies. It's a problem. The US also wants a weak dollar, but they know a strong dollar forces people to the table. But we also know they've already been negotiating. So what we're likely to see is talking the dollar lower from Scott Bessent. It is very important they do so because the US needs to increase its exports. Everybody needs the economic cycle to increase. The Chinese, well, we need them to stimulate because without the Chinese, we don't have a global economy. We have a lopsided economy. And for them to buy US goods, their economy needs to be growing. But they need to stimulate. But if they stimulate with the dollar too strong, their currency peg breaks and they don't want to do that because then you get capital flight. So it's a very fine balancing act of geopolitics and economics and interconnectedness and this kind of global dollar system that they need the US to weaken the dollar. If the US weakens the dollar and injects liquidity into the eurodollar market, which is the offshore dollar market, the Chinese can access it and they can roll their dollar debts. They can start doing quantitative easing. They can start stimulating massively. The global economy can start recovering. They can start buying US goods. Everybody is a winner. So the dollar will come lower. I've known Scott for a long time and he understands the big picture. So I'm just going to have I try that's killer. So the dollar weakening is the next big thing. Oh, crypto. Here's Bitcoin following the same pattern roughly. 2017 has been my base case for a while. Do not expect it to be identical, but and do not expect it to be going to wherever the scale says. I'm not looking for $1 million Bitcoin. Sure, there's a probability, but it's like 5%. But directionally, we should get this right, and it should continue to rally into the end of the year, into 2025, and maybe into early 26. We'll have to wait and see. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here.
Meanwhile, Hester Peirce and Mark Uyeda, known for their pro-crypto stance, are expected to freeze some enforcement actions and kickstart clearer rules for crypto. Add Trump's pick for SEC chair, Paul Atkins, and it's clear the new administration is aiming to support innovation rather than stifle it. Bitcoin's recent surge past $100,000 shows the optimism is real. With promises of clearer regulations and a pro-crypto government, the future for Bitcoin looks incredible. Now let's go back to more exciting stuff from Raoul Pal.
So the first banana zone phase 1, that was this period here as we come up from the sell-off from the halving. Then we have the correction from the banana zone phase 1. Happens every time. Then what do we get? The banana singularity. That's the next bit when everything just goes up and it makes us all look like geniuses. Every stupid shitcoin we've ever bought goes up. Everything goes up. And we think we're gods, which we're obviously not. We're probably just morons trying to do our best. But luckily, crypto market, it trends up over time. So it kind of covers all sins. As long as you're not too far out the shitcoin curve, you'll generally be fine over time, particularly if you don't fuck this up and stick to the big ones. They generally do fine over time. So it can cover all of your sins, your terrible entry points, all your stupid mistakes. I think it'll be fine. So that's what I'm expecting next. We should be starting now. Let's talk about the dollar again. Dollar is a wrecking ball. A strong dollar lowers economic growth. The US Economic Surprises Index shows that it follows the dollar. The dollar has a 2-month lead. The dollar's strong. The economy slows down. So we're expecting to see the US economy slowing down over the next coming 2 months, and sharply so. And bond yields have been going up. This is inverse of bond yields. That also brings down economic growth. So rising yields, a rising dollar leads to falling growth, which leads to rate cuts coming back to be priced in, which is liquidity is coming. Another way of liquidity is rate cuts. Rate cuts are not the best measure of liquidity by any stretch, but it just tells you that we're going to go through a change in expectations. The data is going to come in more dovish. The Fed will have more room to move. The markets will feel better for it. And so slightly bad data, not terrible data, not recession data, just weaker than expected data gives the Fed cover. Remember, the Fed have to roll their debts. And if they roll their debts at too higher rates, it compounds and the debt gets out of control. What they need to do is roll their debts at the lowest interest rates possible. So they've been shoving it on the short end of the curve so they can hope that they can get rates lower and then they can refinance the whole lot. That's been the game. It's the refinancing game, the everything code game. One of the things that's been on my mind, I don't know if a bunch of you caught me yesterday on Thread Guy, trying to explain to a bunch of 22-year-old mid-curvers how AGI is not being built in the crypto space. It's actually coming out of about 4 or 5 places where people are really, really hard working on building a super intelligence. And by all accounts, from what my perception has been for a while is that OpenAI already have AGI in-house. And what they're trying to do is piecemeal it out, because you don't want a big shock when technology goes from here to here. You need to let society digest it as it comes. So I've also had a thesis for a while, and this seems to be playing out as well and now starting to be discussed. And NVIDIA are discussing it and OpenAI discussing it finally, is I believe that the speed of innovation is so fast because they are using AI to build AI itself. So we've got this rapid iteration learning process that is going on with AI, and this has only just started. Using synthetic training data as well, because we already have the corpus of the entire fucking internet that these things are digested. What you're now dealing with is them learning themselves with synthetic data at an accelerating pace. And the better the models get, the faster they will learn, and the more this will go exponential like this. We had Peter Diamandis on yesterday talking to the RVIP community, and Peter's like, it's going to keep getting worse and worse and worse, and you are going to spin to catch up. What we're seeing in crypto land is not really what is happening elsewhere. When we're talking about agents in the AI world that haven't been released yet, these are autonomous agents that will understand what you want to do and undertake multiple tasks to do it without you having to be aware of it. Right now, what we're seeing in the crypto space is a bunch of macros that will undertake certain actions that you want, as opposed to something thinking its way through it, which is what is about to come. 2025 is going to be a monstrous year for technology. It has been, I've never seen anything like this. The IQ of these AI models went from 90 to 157 last year. This year, they're going to go from 157 to 300. That would be smarter than any human that's ever existed on every subject known to humanity. So we're starting to move towards ASI, which is this artificial superintelligence, when it's more intelligent or knowledgeable than all of humanity put together. I mean, these things are bananas, right? But this is where we are. That ASI won't be in 2025. It's kind of closer to 2030, that economic singularity date that I talk about so much, where we don't understand what economies, markets, our jobs, anything looks like beyond 2030 because of technology and the rise of the robots and genetic sciences and longevity and 3D printing and robots 3D printing using AI to create stuff that they need to build factories or products where no humans are involved. Or we start it with a prompt, hey, I want to build a car that does X, Y, Z, and it can all be built. And this is the land we're going into. None of you are prepared.
The crypto market is heading into the banana singularity phase, as Raoul Pal likes to say it, where prices across the board could soar, rewarding those who stay focused on key assets like Bitcoin and Ethereum. Meanwhile, macroeconomic changes like a strong dollar, rising bond yields, and expected Fed rate cuts will be the reasons for increased liquidity. This mix of market momentum and easing financial conditions could drive significant crypto gains in the months ahead, offering a golden opportunity for investors. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top-on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.